Let's pick up on the markets now. The local bourse will be competing with low Asian markets despite the rally on Wall Street. This as worry about lower interest rates and high inflation in the region grows. Jimmy Moyaha is independent markets analyst, joining us now to talk us through the latest market developments. Jimmy, good morning to you, sir. Give us your sense of how the markets are faring in early trade after some recovery yesterday from last week's sell-off.
Good morning, Pauline. Good morning to the viewers. I think markets at the moment are still quite jittery. We're seeing that the top 40 and our local equity markets are down. We've got a lot of equities trading in the red in early trade. We have gold. We have our rand also trading back at 16 rand to the dollar, which is a worrying level, particularly ahead of the inflation numbers that we are expecting to get out later today. But from equities perspective, we've got some equities trading down, as I said, in early morning trade. We've got our top 40 that's down some 1.5% at the moment, but you've also got stocks like Impala down 3%, stocks like Sasol down 6%, stocks like Sibanye down 3% as well. So a very, very red start to the morning and to the middle of the week.
Let's talk about what the locals are looking at here. All eyes will be on the release of that inflation data for the month of May, with some economists expecting it to breach that 6% upper limit of the South African Reserve Bank's target. While you tell me what your expectations are, what would it mean if indeed it does reach that target band of 6%?
Well, I mean, from a monetary policy perspective, we know that the Reserve Bank has been very cautious and very deliberate in their inflation targeting methods and mechanisms, and we know that a breach of that upper limit of the 6%, we're expecting around 6.1 to 6.2% to come in as the inflation number. But we know that if that is the print, that the Reserve Bank will want to get that under control and back under the 6% level as soon as possible, so that could signal even more rate hikes. If you remember back to the quarterly planning policy from the Reserve Bank at the start of the year, we had only anticipated that we'd do about 3 rate hikes of 0.25% each for this year, and we've already seen about a 1% rate hike from the Reserve Bank since then. So we've already exceeded that expectation and that targeting that was originally forecast. But I mean, the Reserve Bank has also come out to say that their gradual approach from July of last year to now to managing inflation has put them in a better position than countries like the US and Europe, where inflation has been allowed to sort of run a bit, and now the measures to sort of stabilize it and control it have become a lot more stringent and a lot sharper. So the Reserve Bank has said that their gradual approach is not going to endanger consumers, but of course we are aware of the concerns that are around there. I mean, the concerns around whether or not consumers will be able to continue to afford goods and services, given where we're sitting with the global food shortages and supply chain shortages around the world, as well as what's happening with the Russia-Ukraine tensions affecting the wheat prices and the oil price markets and that sort of thing. So I think the inflation print today is going to be quite important for South Africa because it will give the Reserve Bank a bearing on where the economy is sitting. I mean, we know, of course, that they can only do so much in trying to alleviate that pressure and trying to control the inflationary pressure that we experience as consumers. They want to sort of keep a lid on the rand, possibly going above 16, 17 rand again. Where we're sitting at the moment, as I said, we're sitting at about 16 rand in this morning, and we're struggling to come below 15 rand, 50, 15 rand 80 or so at this stage, and that's a worrying sight for the Reserve Bank, but also it affects things like our import pricing and that sort of thing when we look at that. So important inflationary numbers coming out today, and that will give us a bearing and a direction on what we could expect from our central bank.
You've prompted my next question, Jimmy, and you touched on food shortages. The World Bank pledging $2.3 billion. This is to try and tackle this continent's food insecurity. Talk us through what the countries are likely to benefit from this and how the funding, importantly, will be distributed?
Yeah, so the World Bank announced that the $2.3 billion funding for the countries, and we've got sort of a staged and a phased approach that they're going to look to adopt for that. It will cover a range of things, including providing some of that funding towards research institutions so that they can better provide the World Bank with data on who needs the assistance more. I believe the first phase will be targeted at Ethiopia and Madagascar, and we're looking at about $788 million being used for that phase. We know that later on after that we've got countries like Mozambique, Malawi, South Sudan, Tanzania, Zimbabwe and Zambia on that list as well. There's been no mention of South Africa on that list at this stage, and I think the main goal of this relief is to assist. I mean, the World Bank has identified that there are well over 30 million people that are in need of food assistance, or that are that have food insecurity at this stage, and they're looking to sort of assist. Again, with the first round, they're looking to target about 2.3 million of those people. But again, the phased approach as we roll out or as they roll it out, will then hopefully reach more countries within Central and Southern Africa.
Yeah. Final question. Let's talk about the Tesla billionaire, Elon Musk, one step closer to owning Twitter after Twitter's board of directors recommended that shareholders vote in favor of the takeover. I promise I have no opinion on this. Just talk us through the latest developments.
Well, it's a step in the right direction on Elon Musk's part. I mean, we know that he has had a couple of concerns around this deal in the past, but the board there's a couple of steps, much like in South Africa, where an acquisition or a takeover needs to go through certain approvals, competition commission approvals. In America, it would be SEC approvals and the like, and that sort of thing. And this is just one of the steps in that direction. You need the shareholders to agree and consent to taking up the offer and those sorts of things. And the board, I mean, is advising this on the basis that if Elon Musk's offer is still to hold where it is, given where Twitter's current share price is, just shows you the difference between the valuation that is currently in the market for the stock and what Elon's willing to pay for it. I mean, we've got the shares trading about 34 to 36% lower than the offer that is being put on the table by Elon. So it is, and if a shareholder would be holding at this current price versus accepting the offer, they would stand to gain significantly in accepting the offer at the price that's being offered. From Elon's side of things as well, I mean, he's made it very clear that he wants to take the company private, which the shareholders are, and the board is advising or is happy with, given that remaining publicly listed probably has a lot of listing requirements and reporting requirements and that sort of thing, and that might be something that the board might be looking to take advantage of by moving to a private organization. So one step along a very long process towards finalizing the takeover and finalizing the transactions. There are a couple of other transactions or agreements that are coming alongside this particular takeover, so smaller agreements that are in place as well as part of this big takeover. They haven't been made public knowledge as yet by the board, but they're saying that all of those agreements are sort of on track, and that shareholders at this stage are likely to benefit more from taking this deal than from leaving Twitter in its current position.
Mm-hmm. I suppose the niggling question still remains, what is he going to do with it? All right, Jimmy Moyaha, you and I won't have the answer to that question. Thank you very much for this markets update.